Hey, welcome back to the channel, folks. This is Jason, host of Fighting Words Financial. How's everybody doing today? This is basically Monday after 4 weeks of rising market. The market has clawed back from losses earlier today, and we're looking at the NASDAQ up by 80 points, the Dow Jones up by 165 or so. It looks like 150 over here. Basically, all the indices look like they're going to end in the green today by just under 1% or right around 0.5% or so. The big news, of course, is that oil has absolutely crashed. It's below $90 a barrel at this point. And I think you should look at inflation numbers that came out last week through the lens of oil. We've seen declining oil prices now for the past month or so, and that has a big impact on inflation. So core inflation really has not declined as much as I or regular Americans or folks around the world would like to see, and I think that bodes fairly negatively for interest rates in the future. Meaning, I see interest rates similar to what have been happening for the last 2 months. I see that happening in the future. So the big news today in terms of stocks, like I said, energy is down almost 1.55%. Materials are down as well. Materials are really down on China troubles at this point, and we can talk about that a little bit. But I did want to address the first question right off the bat. Hey, Jason, what do you make of Michael Burry dumping most of his stocks? So I generally don't make a big deal out of what any expert says, even Kathy Wood to a degree. I don't like to get into hero worship. Michael Burry is, of course, famous for calling the 2008 crash, but lately he's been more famous for being a perma bear, meaning he always sees the worst things happening in the stock market. And yeah, so you should take that with a grain of salt. Remember, also, he just frequently trades anyway. He's in and out of stocks a lot. He's also known for shorting a number of stocks. When he starts shorting here, I'm going to be interested to see what he actually shorts going forward. Tesla has been one of his favorite targets in the past. And from what I understand, that has not really worked out for him. So, yeah. So what do I think about him dumping stocks? Not that much, to be honest with you. There are a lot of folks out there who are going to say that the bear market is not over. I am one of those. It doesn't mean that I'm bailing out of stocks at this point, though. That is just not what's happening. So, yeah, a lot going on in the stock market. You guys feel free to fire away with any questions that you might have, and we can talk about anything going on in the economy right now as long as I'm informed about it. If not, I'll just tell you that I'm not informed about it. This is probably one of the most troubling articles that came out today. This is on Barron's. It's behind their paywall. But the economic data coming out of China is not great, and it's not good for U.S. businesses that do business in the country, including 3M, Tesla, and many other manufacturers. China had an industrial growth production for July of 3.8% year over year, while economists predicted 4.3%. Industrial production growth is 3.5% this year compared to 2021 through July of last year. It is about 14.4% higher than the comparable period in 2020. So retail sales are up 2.7%. Now, look, in terms of the American economy, these would be great numbers. China, though, has typically had GDP growth higher than that of the United States for the last 20 years or so for a variety of different reasons. Number one, they're just building industry at a breakneck speed. They're also the sort of industrial beating heart of the world. But also their real estate industry has taken up a lot of their economic activity, and the real estate industry in China is absolutely crashing at this moment. But the retail sales statistic is potentially problematic for automakers like Tesla and General Motors. Tesla generated roughly 26% of its sales from China in 2021, and GM generated about 11%. Also, good news out of the Tesla Gigafactory in Shanghai. They just produced their 1 millionth automobile, which means that Tesla, in the lifetime of its vehicle, or lifetime of the company, has roughly produced about 3 million vehicles. Now, by the end of next year, they will have the capacity to produce almost 3 million vehicles annually, or pretty close to half of the production capacity of GM, which is enormous, guys. I don't think you understand the input as far as what's going on, the importance of what's going on with this company. There have essentially been no successful new auto companies since Ford and GM came onto the market in the United States. There really haven't been. And out of the 1,600 or so that were founded between 1900 and 1940, only Ford remains. Every other company has gone out of business and had to have been reorganized. And there have been no successful companies until Tesla. Tesla now is coming up on close to 20 years. There were a couple of other manufacturers that made it to that 20-year mark, but none of them have the industrial capacity, the production capacity, and the worldwide brand recognition that Tesla does. You're not looking at Saturn really being sold outside of the United States. You're not really looking at AMC being sold outside of the United States when they were in their heyday. Tesla, on the other hand, has global brand recognition. So this is really big. So do you think China's house pyramid scheme will collapse? So I'm not sure that pyramid scheme is the right description for it. It deserves its own description. It is a scheme. I will say that much. Prepaying for houses and then building the houses essentially on spec is something that's been done in China for a very, very long time. And that seems to be unraveling at this point. The Chinese government, though, is likely to step in a big way. But this is going to be the fourth time in the last 15 years that the Chinese government has had to step in for a banking crisis of some sort. Will it collapse? I don't know. The dynamics of their economy are a lot different than ours is, but I do expect a reckoning. Unlike the United States, when you have collapses like this, CEOs tend to disappear like forever. No one ever sees them again, and people actually get punished for this. So, yeah, I know you've heard of this described as a Ponzi scheme. I have too, but when I kind of looked into the scheme of how things are developed, I wouldn't necessarily call it a Ponzi scheme because these are individual projects that are put together as like kind of standalone deals. It's not like this sort of continuous investment and then paying paying investors with funds from paying old investors with funds with new investments. That's kind of the definition of a Ponzi scheme. So it is a scheme of some sort, but like I said, it probably deserves its own name. Any thoughts on Bed Bath & Beyond? Could it moon the same way that GameStop could? I don't know that. I don't think anyone knows that. And I think that GameStop and a couple of other companies may have sort of been a once in a lifetime moment. But I do know that by the time anyone posts their gains on Reddit, the opportunity there is pretty much gone, guys. So I would be careful about that. I would pay closer. I'm not going to do this, but you guys can feel free to. But I would pay closer attention to some of the Reddit, the subreddits that are out there that are talking up these stocks and sort of organizing these short squeezes. And I would try to jump on them before people start posting their gains. But right now, that's all pretty much over. So. I sold Palantir because Alex Karp needs to go. Man, Alex Karp sounded a little deranged on the last earnings call. I'm not going to lie about that. Like I ended up going back and listening to like the entire call and he sounded a little bit deranged. And I don't know if the derangement was just sort of a misdirect, but he basically just kept bragging about how great Palantir is and how there is no competition, where I know for a fact he has plenty of competition in that field. And I don't know if Alex Karp needs to go, but Palantir is a stock, remember, that I've never been a believer in, right? I've always been very cautious about what I say about Palantir, largely because I'm more familiar with that government space than most people are, just because of where I work and who I've dealt with. And I understand the games that go on when it comes to government contracting, which I think a lot of investors don't. And no one's going to grab a dominant slice of the pie in this business. That the government portion of the AI business, data analytics, and big data, the government portion that's going to go to a lot of different players is going to be diversified. So buying puts on Palantir is not necessarily a bad idea. I've actually bought a lot of puts recently on some of my favorite stocks, mostly because I think that further declines could be coming. And if we do see those further declines, I'm going to get those stocks at a price that I think it's fairly valued, right? If that doesn't happen, well, I just get to keep the premiums and reinvest those. But right now, I'm not even reinvesting premiums at this point. I'm kind of sitting on that in case I have to buy back any of these, or something like that. So, whoa. Any thoughts on Warren Redlich's plan to personally help repopulate the planet? Not familiar with that plan. Sorry. I don't know anything about that. Personally help repopulate the planet. So I personally help repopulate the planet. I've got a couple of kids. And in case you're wondering, in case you're going to say that's not repopulating the planet, just replacing two kids with you and your wife. No, it actually is, because there's pretty much a guarantee that they're going to reproduce before I pass away. So it will increase population. But yeah, so back to Palantir though, just for a moment. What we really want to see is growth in the penetration of the private sector. That's what I'm really looking for. Before Palantir really becomes investable, in my opinion, they need to have solid growth. Now, they just put a business-to-business sales team in place. I think just a few months ago, they just started advertising for it on Indeed.com, I think the beginning of the year. And that team is in place. It takes a while to ramp that up. And business-to-business sales is actually tough. You can't do everything on word of mouth when it comes to software, because it's too complex of a product to understand without it being presented to you. And this is coming from someone who sits through product presentations all the time on very complex financial instruments. And I've done it in the past on very complex software packages. And I can tell you that it does require a salesperson to really help you to understand, a very technically well-educated salesperson as well. You deal with a lot of folks that aren't all that technically educated. So So in other economic news today, let's see if my internet connection is going to cooperate. Goldman sees a feasible but difficult path for the Fed to defeat inflation without recession. I do not see that as possible. I see that we will absolutely have a real recession here in the future, and the Fed is far more concerned with defeating inflation than it is maintaining full employment, and especially with the stock market. They don't actually care that much about the stock market. They're far more concerned with the stability of the fixed income market. And if you have not been paying any attention to fixed income for the last 2 decades because it's boring, and trust me, it's boring. As someone who used to handle a large book of fixed income business, it is absolutely dull. But it is really important to the health and well-being of the economy as a whole. Far more important in a lot of ways than the stock market. So yeah. Let's talk about all of these companies being delisted in China, or announcing delisting from the United States. So a couple of ways to look at that. Does this bode poorly for the future when it comes to delisting of some of our favorite stocks like Alibaba, NIO, Xpeng, Baidu, and a few others? I think that it does to a degree. It's tempered by this fact, though. What was withdrawn off of U.S. exchanges were basically state-owned enterprises. What remains right now, and the companies that are trying to align themselves with U.S. Accounting standards, are the companies that are privately traded, which have been in the past excluded from capital markets in China itself. Meaning that you could possibly go public on the Hong Kong exchange, but you couldn't do it on the Shanghai exchange or the Shenzhen exchange. So you were shut out of those markets. That may be changing in China. If that changes in China, and we do see a robust capital market there for private enterprise, you may see a lot less incentive for these companies to go through the expense of remaining compliant for U.S. exchanges, and you may see them have a lot more incentive to just leave. Right. The other thing to look at is these companies that withdrew. Most of them had really low volume of trades on their stocks for the market caps that they held. We're looking at companies with $4 to $12 billion market caps, at least the ones that I was looking at, where anywhere from 2 to 500,000 shares were trading on a daily basis, and they hadn't done a secondary offering or raise money with convertible bonds or bond issues in quite some time. So I actually see that those 5 companies leaving is a non-issue in terms of the dollar amount and spread across the entire economy, but also maybe as a signal as far as what's to come for these other companies. So yeah, very interesting things going on with that right now. I noticed that the manufacturing sector is on the rise. It depends on where you look. When you're looking at some of the region-specific manufacturing that's going on, I was looking at a report out of New York where there were significant declines in the manufacturing sector there. And there's a lot of manufacturing that goes on in New York. A couple of bright spots, though, are the South, like Alabama and Georgia at this point. And speaking of Georgia, Rivian just made kind of a big announcement when it comes to their new platform, like the RV 2.0 program or whatever it is. They're looking to be up and running in full by 2025 in Georgia. So, yeah, did want to cover some EV news today. You guys can let me know what you are concerned with. I did want to talk a little bit about, hold on a second here. Oh, I'm planning to buy pot right now instead of Palantir. Okay. Man, I have some issues with the pot industry in general. It's not one that I've invested in seriously. I think I bought a few thousand shares of what was it, SunPower or something like that when they were down at like 30 cents a share and sold again at like 75. That's one of the few like truly short-term trades I've done in the past few years, but that was completely speculation. My issue with investing in a lot of the marijuana industry right now is that they're actually locked out of financial markets and they're forced to deal in cash a lot of times, which leaves a lot of opportunity for nefarious things to go on. And I'm not talking about necessarily criminal and fraudulent things. I'm just talking about things going missing and them not being very efficient in terms of their operations. So I live in one of the places where it's legal to have dispensaries. You don't need a prescription. You can just walk in and buy it. These places do robust business, but it's almost all done with debit cards and cash. And, and they have issues with all of their suppliers being shut out of financial markets too. So I actually expect a ton of IRS enforcement in one way or another on the marijuana industry. I expect a ton of consolidation over the next couple of years in the marijuana industry. And if you were actually going to invest in the marijuana industry right now, I think actually the Canadian markets are a better place. They have a little bit more in the way of legal standing in that country, meaning they're not shut out of financial systems there. So that's kind of my opinion on that. And it doesn't, in a lot of ways, because of the capital, and this is somebody from my who used to be a part of my Patreon group brought this up. This may be one of the few industries where I would be willing to invest in retail, largely because of the capital expense of the growing operation and the fact that the growing operations are so immature in a lot of ways in dealing in delivering large amounts of product to their retail location. It may make a lot of more sense to invest in like a real strong retailing platform. The problem is right now, I don't have the ability to do that in the United States. I would have to do that in Canada. And I think that's probably a better option because there's a couple of companies out there. I just can't remember the name of them. One of them is a large retailing operation. So your expense to get a retailing operation off the ground is a lot less than it is a growing operation. So you're not as far behind the eight ball when you're starting out. So one of the things I've been thinking about off and on is the marijuana industry, but I've yet to take the dive into that. It's all speculation at this point, and I like investment rather than speculation. So once again, let me see here. I heard about Biden's plan to tax the rich through stock buybacks. Is this good or bad? Would companies choose to list elsewhere instead? So choosing to list elsewhere instead is probably not that probably wouldn't be a huge motivation. A lot of what you get when you list stocks on U.S. stock exchanges is also the ability to sell bonds in markets here. And for much of history, that has been more important for companies than selling stock. So the idea of secondary offerings and stock splits, especially secondary offerings, is not necessarily recent, but the popularity of secondary offerings of stock is recent. That has really been popular in the last 15 years or so, where the consumer of the retail consumer and the institutional consumer has been willing to just eat dilution over time. So, but most of the actual tax parts of the curiously named Inflation Reduction Act, almost all of the tax the tax increases were cut from the final bill. There's virtually nothing in there, including the SALT reduction, the state and local tax deduction. Right now, that's set at a maximum of $10,000. You could own a really nice home in Texas, and you hit your maximum for state and local tax deductions because they're really high. property taxes there, you hit your maximum for state and local tax deductions. You're not able to deduct anymore. If you pay state income taxes anywhere and own a home as well, then you would be capped out at a $10,000 deduction. California offers business owners a way around that. You're able to run a lot of your tax burden through your pass-through entities like LLCs, S corps, and that sort of thing, and that allows you to take that deduction at the corporate or business level rather than passing it on to you at the personal level. So that's a nice workaround. Who knows if that's going to survive an IRS challenge? We'll actually have to find out about that. But yeah, most of the tax plan stuff in the bill was actually cut from it, and the point has been made in the mainstream media, of course, that most of it was going to target folks that made over $400,000 a year. But here's what's actually going to happen to taxes on the middle class based on the 2017 Tax Cuts and Jobs Act that was passed by the Trump administration. So yeah, taxes were cut by a small amount for folks making under like $160,000, $170,000 a year, but there were massive tax cuts for people earning more than that, like huge tax cuts. What's built into the tax law though is a sunsetting of all of the deductions for folks making under like $170,000 a year or so. So basically, the middle class is going to see a small tax increase every year through, I think, 2027, based on what was passed in 2017 during the Trump administration. Now, look, we actually have a problem with how many people in this country pay taxes, right? A little bit more than half of people in this country actually pay taxes, and a little bit less than half of people in this country don't pay a dime in terms of federal taxes. So, I am not in favor of allowing people not to have skin in the game at all. And that's a political position as much as an economic position. If you've ever worked for a nonprofit or ever run a large fundraising campaign, you know that especially this is done a lot for the military, when they go around and they raise money for charities, they don't go to all the senior officers there and say, please give $20,000. What they try to do is get everybody to give a little. You can earn a lot more money or gather a lot more money with a fundraising operation by getting 1 million people to contribute a little bit rather than going after the whales and trying to get them to contribute a lot. So I do see that our tax system right now is a bit out of whack in how it's collected. Most people earning between $400,000 and like $170,000 a year are paying the vast majority of the bills in the United States. So if you think we're in a bear market rally, what do you see the catalyst for reserve? Oil is coming down and inflation seems to have peaked. So inflation only seems to have peaked because oil is coming down. And that's really reflected in the futures market, and a little bit because wheat futures have come down as well. The catalyst is going to be one of the catalysts could be is a worsening situation in Ukraine right now, where Russia is able to recapture Kherson, which they seem to be losing right now, and especially the port of Odessa, turning Ukraine into a landlocked nation, which would automatically spike the price of wheat worldwide, which is going to affect other food prices. The other thing is, of course, taking a look at oil prices. We are looking at a really active hurricane season, and most of our oil refining facilities in the United States are located on the Gulf Coast, which is in the path for hurricanes. Not only that, we're looking at harvests being great in Ukraine, considering that everything that we're looking at right now, but harvests in places like Syria, which used to be a breadbasket of grain production, and Egypt as well, they are not looking good. They're not even going to be able to feed themselves this year. They're going to have to be buying massive amounts of grain from outside of those two countries. And those two countries have a higher demand than you might think. So, So, Jason, please share thoughts on the prospects for Bitcoin and Bitcoin mining stocks into the year January 2023. I see a lot of trouble on the horizon for Bitcoin mining stocks and for Bitcoin itself. I think that we seem to hit a floor of around 21,000 or so for Bitcoin. It tends to bounce off of that quite a bit. But let's remember, just like the U.S. dollar, but unlike the U.S. dollar, Bitcoin is entirely based right now on, it has no intrinsic value. Neither does US dollar. People just think that it does. And until people think that Bitcoin has an intrinsic value, it's going to be highly volatile. So Bitcoin mining, look, in September, most of those Bitcoin miners also mine Ethereum, and you are switching over to a much more efficient method, of transaction validation called staking, which is going. When I say efficient, it means it's going to generate a lot less money for the people that are mining right now. They're going to have to turn to staking, which means they're going to have to own um, Ethereum, which actually may cause the price of Ethereum to stabilize, but it may not cause it to rise. There's no inherent mechanism that says that the tokenomics here are going to are going to rise. So, yeah. Do you have any company on your radar right now? Actually, yeah. Well, the company that I'm probably looking at right now that I haven't been necessarily, I've done one video on in the past, but I haven't said much about it, is Moneyline. I had a few reservations about Moneyline, but their second quarter results don't look too terrible right now. And I think that they're doing a little bit better than I thought. And the price is actually fairly compelling right now. You could buy a few shares for a lot, and you only need a small price movement on that stock in order to make quite a bit of money. So, and I think that right now at $2.40 a share, it's worth the risk. They're at negative $42, 42 cents per share right now in terms of EPS. They have really great transaction volume for a company with a market cap of only 651 million. They have a lot of room to grow. They have, they have a great suite of products there. It's a little bit less efficient than, say, like SoFi's suite of products, meaning they have a few more middlemen in the way. Taking a look at things here, but when we look at so they don't have quarterly. Let me see if they have the latest quarterly earnings growth. Yeah. So earnings growth is fairly steady in this time period. So they've gone roughly in the last 4 quarters from 41 million up to 87 million. So they more than doubled their income. Their expenses were actually fairly high. I haven't dug into their quarterly report enough to understand why their expenses are fairly high, but earnings growth actually looks pretty good. And if they continue their earnings growth like this, they are on a pathway to be profitable, and they are on a pathway to be profitable relatively soon. So, yeah. Let me see here. Hold on a second. Tech on Top. Tech on Top. I think you're familiar and you've been on my live streams before. So, are we in a bull or bear market, Jason? So I don't think the bear market is over. I think that we're going to have a couple more inflation shocks. And I think that the market, at least until recently, has kind of incorrectly priced what the Fed is willing to do to tame inflation. I think that some of the discouraging news that's come out in terms of stock market reaction versus economic realities, when I'm looking at production charts and economic numbers, would indicate that we're probably looking at some more volatility. I stated kind of at a couple of months ago that the bottom of the market is probably around 3,600. And the best we're probably going to do by the end of the year, and I think there's only an outside chance that we make it there, is about 4,800. So, and we kind of got close to about 3,600 before, and I think within 10% of 3,600 either way is going to be the bottom. And yeah, so it's not to say that I haven't been buying the whole time. I have absolutely been buying the whole time, grabbing little stocks here. Yeah, so let me see here. And okay, so European utilities are gearing up to switch from gas to burning oil. Yeah, so a lot of those utility companies, particularly in England, switch. They have the ability to be pretty flexible when it comes to what they burn, and especially in the UK, they burn essentially these wooden pellets that are put together from sawdust here in the United States and Canada, stuff that would ordinarily be waste, and it's actually moved by a container ship over to Britain, and it is burned there, which is terrible for the environment. But it's already sawdust. It's already going to be broken down and put into the atmosphere at some point. So, yeah, like they have pretty flexible ways to generate electricity in Europe, and they've been doing that for a while. And I do think that the era of Europe buying natural gas or being so dependent on natural gas is probably done forever. They're never going to go back to being that dependent on a single source. But the UAE, and a couple of other countries, including a number of countries in Africa, are actually gearing up pretty heavily to start exporting natural gas to Europe. That's going to be a new market for African natural gas. A couple countries like Morocco and Algeria and a few other countries are really going to benefit from this. Cyprus is actually going to be one of the bigger beneficiaries. Israel as well. They're going to probably start exporting natural gas. So, yeah. Hello, Jason. Some say the bulls start now leading the market, especially in tech, EV, and EV infrastructure. Do you see the same for your level of expertise? So look, ChargePoint, Blink, Tesla, Neo, and Xplung. Let's take a look here. So I am not a fan of ChargePoint and Blink, not because they're not good companies, not because they're not going to grow. I just think they're going to grow at a much slower pace than many people think they are because of destructive competition here. And because there's nothing special about charging technologies. They're just glorified plugs. And let's take a look at what I'm talking about here. And we're going to talk about this news that I just saw today, if I can find it again. And let me see here. EVgo orders 1,000 ultra-fast charging from Delta Electronics. Anybody heard of Delta Electronics? Anybody think that they're a leader in EV charging? No, they're an electrical components manufacturer. That's all they are. They're the entry point, or the barriers to entry into this industry are basically nil. And it's actually, hold on a second. I did something to my computer and now I can't really see my my comments. All right. So yeah, I have no idea what I did. Oh, okay. Back to my comments. All right. So, so EVgo announced a new supply agreement with Delta Electronics, which has become a strategic partner related to DC fast charging equipment. They're going to provide EVgo with 1,000 fast chargers, power output of 350 kilowatts, which is expected to mitigate supply chain risk and support fast charging deployment targets in the U.S. It's quite a substantial deal. So this is EVgo going to a third-party manufacturer. So there's no indication that ChargePoint or Blink would actually be able to manufacture any of this charging infrastructure at a better price point than existing electrical component manufacturers. So, So Dewey says trees are grown specifically for pelletization in North Carolina, not waste. Interesting. Okay. The research that I read was on Canada, where it stated it was essentially sawmill waste that was being used. That's even worse if they're specifically grown for pelletization. That's even worse. And energy prices are scary high in Europe right now. How does the industrial sector survive? Yeah, this is one of the things that I'm really concerned about. Europe was just starting to climb out of a really deep hole at the beginning of 2022, and things actually looked pretty bright. And now they're really just getting kicked square between the legs, economically speaking, due to energy prices. I'm really concerned about what's going to happen this winter and what policies are going to be put in place in order to solve the issue of being dependent on Russian gas. So it's just not happening fast enough. And my prediction is it's going to be a cold Europe in winter, and industrial output is going to decline because of high energy prices, contributing to the risk of recession here. Now, let's remember that Europe does not have as severe layoffs as the United States does. When we do have an economic downturn, they're much more conservative in hiring practices. They're much more restrictive in firing practices in terms of like layoffs. So purchasing power tends to be maintained quite a bit better in Europe than it does in the United States, but it also makes their economy quite a bit less flexible, especially their workforce quite a bit flexible. So Bram also says, you mentioned the hurricane threat. One so far, Alex, in mid-August. Katrina was number 11 in 2005, late August. Prediction is hard, especially the future. Yeah, and especially when it comes to especially when it comes to hurricanes. Like I've seen predictions of massive problems with a hurricane season, and there were 5 named storms that year, and none of them hit the coast. They all ended up spinning off in the East Coast into colder water and dying out. So yeah, it is kind of hard. But what I'm saying is that any disruption is probably going to have seriously negative consequences on the oil industry, more than normal, because supply is tight at this point. We do have good signs that not places like Saudi Arabia, which really can't increase production, but a number of other countries are increasing production at this point. So, yeah, that's one of the things that I have been taking a look at as far as predictions goes. And you are correct; predictions are often wrong when it comes to hurricanes. So, if you had a chance to look at NextEra Energy or Axon Enterprises, oh yeah, so no, Axon is a company that I covered last year. It's one that I keep a tight eye on. This would be one of the companies that I'm looking at as sort of a sneaker growth company. So I've made quite a bit of money on two companies in my life. One of them being Hanson Natural Products, and one of them being Asta Funding, which Hanson Natural Products you know of because eventually that became Monster Energy Drink. But I bought them when they were initially like really small, like a tiny company. And Asta Funding, which all they were was a debt collection business, and they had a really interesting business model. And I made a lot of money on that side. I'm looking at Axon right now, kind of greedily, with that same sort of thing. Like they have a lock right now on the body cam business, but it's not the body cam business that's really going to be their income driver in the future. It's evidence.com is going to be their income driver in the future. And the fact that it's subscription based, like I think that it's feasible that the majority of law enforcement agencies will be signed up with cataloging, storing, and sharing evidence data across evidence.com here in the future. From what I understand, they are also working on a partnership with Parabon Nanolabs, which Parabon Nanolabs is the company that's largely been responsible for the capture of a lot of criminals in cold cases. In fact, the one that and I know I've never said this on the air, but a cold case that my biological father, who I never met, was a suspect in for 55 years, was recently solved by Parabon Nanolabs, and my DNA was one of the things that actually excluded him as a viable candidate for that. So very interestingly, though, and you make the point here that 40% of revenue is from software as a service, and although they're known for their body cams, you are correct on that. 40% of the revenue is from software as a service, and I only expect that to grow, and I expect that to be absolutely huge. So this is one of those sneaker companies that I really have my eye on. I don't own any shares of it now. I may start acquiring like 1, 2 here and there until I get to 100 shares, and then start selling options on those. I haven't really dived into that yet. I just want to do a little bit more research. As far as NextEra Energy goes, look, I mean, they have impressive media that's out there. They have an impressive website. They have an impressive mission. I need to see a little bit more in terms of the numbers to understand whether or not, see here. Let me see here. You've said in the past that you're interested in geopolitics and its impact on business. Have you listened to Peter Zehan? I'm reading his book, Disunited Nations from 20. Now, so I have heard of the book Disunited Nations. It's on my reading list. I have not read that as of yet. But I did read sort of a condensed version of that, an article on the book, which basically convinces me that I need to read that. I do a lot of reading. I do a lot of reading that doesn't necessarily have a lot to do with our current economy, but I actually read a lot on past economies. So what was it? There was a book and actually a research paper, I think it was called Prehistoric Economics, where it talks about the breakdown of economics in hunter-gatherer society, where we have a monetary economy right now that's based on trade and money. They have an economy that's based on something different, which is basically it's what's called a reciprocal economy, where you do a favor for someone else, they owe a favor to you, and this is how the economy works. Like in the past, the way we looked at it is we looked at them as hunter-gatherers, even modern-day hunter-gatherers like the Khoisan in South Africa, as not having an economy. Well, that perception was wrong. So there's always a new way to look at perception, or look at how economies are structured. And you have to read Marx also to understand how capitalism is structured. Before Marx came along, there really wasn't a clear and concise description of how capitalism actually worked. And Marx and Engels actually kind of like put that in perspective. Now, I am, of course, a capitalist, right? I mean, I own several businesses. I use the money that I have to start new business. That's kind of the definition of capitalism, meaning I make money by owning things, not necessarily by working in the industries that I own. But it's very important for everyone to do the sort of um, wider reading on economies and how they work. I also recommend reading Ray Dalio's books, although you have to remember that Ray Dalio, at every step of the way, at every point in history, always thinks that the roof is going to cave down wherever he is. Uh, so how do you allocate when everything seems cheap and you have a lot to buy? Do you hyper concentrate in a few stocks or spread yourself thin? So I don't hyper concentrate in a few stocks. Like I've said before, about 70% of my portfolio is in ETFs, which are pretty widely diversified, and only about 30% of my investable net worth ends up going into individual stocks. So I am a bit more concentrated in the individual stock picks that I've taken. And I, because the more diversified I get, the less chance I think I have of actually beating the market. And if I'm just going to, do what the market does, why not take the stress out of it and just get the lowest priced or the lowest cost ETF that I can out there? You can get a total stock market ETF for roughly 0.09% management fee on an annual basis, right? And you probably most people are not actually going to beat that by investing. And when I say most people, it's roughly 90%. So I've beaten the index over the lifetime of my investing career with a great side dish of luck served in there, right? A huge side dish of luck. But, I don't really talk about all the stocks that I bought that went to zero, right? And there've been quite a few of them, or all the stocks that I bought that like 3D printers, like symbol DDD. I am fairly certain that the top price that stock ever sold for, I'm pretty certain that's me. I'm pretty certain that I bought it then, right? And there's actually two stocks that I'm fairly certain that one that I bought at the highest price ever, and one that I have sold at the highest price ever. So if you look at Big Bear AI, which is trading at $1.80 a share right now, it sold at 16.12, I think sometime in April or May. That was me. I sold my shares at 16.12, which was the highest price ever, and now I just own like 100 shares of that. But Big Bear AI is another company that is looking to compete with Palantir. It's one of dozens of companies out there looking to compete in that space. They probably don't even look at Palantir as like direct competition. The space is so wide open at this point that many of these companies don't look at each other as direct competition. The biggest competition that a company like Palantir has is actually somebody like Snowflake, which their penetration into the private sector is huge, and it's growing quickly, and they have a professional sales force out there, and they don't have a lot of the political baggage that comes along with Palantir. And if you don't think that the political baggage matters, it really does. They do not have the best relationship with with intelligence services, and part of that has to do with some of the things that they've publicized in the past and chosen not to deny. So anyway, Joe, that was a rambling answer to your question, but I am concentrating a little bit more. The newest stock that I'm acquiring is, of course, Upstart, and I like to see things after they've gotten kicked square in the family jewels. And when they're still good stocks, I like to look for value, even in growth stocks. I like to look for value. But MoneyLion is probably the next stock that I'm looking at. That would be a bit more speculative. I generally, with a stock that has a market cap that small and revenues that small, I'm a little bit concerned with. So, yeah. So Michael Will says the LIT, which is the lithium battery chain ETF, is doing very well recently, up 22% in the last 3 months. What is the long-awaited? Is this a long-awaited run in lithium companies? So I actually don't think that the run in lithium companies is going to be as extreme as 22% in the last 3 months, but I think that 15% a year is a fantastic gain, and I think you're probably going to see that generally in that lithium ETF over the next decade or so, and maybe a little bit longer, and then it'll slow down to roughly 10 to 12% a year after that. So I do think it's a solid, and it's going to be a more solid investment than most of your individual stock choices in that portfolio. You're going to have a few standouts in the lithium industry, and the rest of them are going to get acquired or fail. And that's just, and it's one of those things. It's lithium is not rare. It's not concentrated. It's in a lot of different places. The race is going to be who can create the production facilities and distribution networks the quickest. It's not who can find it. It's not oil, right? We know where lithium deposits are. They're basically everywhere. The trick is getting them out of the ground and refining them into a usable form, right? And a lot of lithium deposits are in rocks. It's going to be very, very difficult to get to them. So the easy deposits are going to be like lithium salts right now, in like salt flats, and of course the ocean. I expect at some point we're probably going to see a combination of, especially here on the West Coast, water desalination plants and lithium mining. And I've talked to a couple of people in that industry, and they kind of didn't buy it at first. And by the end of the conversation, these are people that work in desalination. We have a plant close to here in Carlsbad, California. And I talked to a couple of people that work there, and they didn't buy it at first. And then when we started talking about the volumes of water going through, that the needs of the American Southwest in terms of water security, how many more salinization plants could be built in the United States, in Mexico, off the coast of California, or on the coast of California, Mexico, and of course, the coast of Texas. We actually could see far more in the way of desalinization here in the future. But I think you can't leave nuclear out of that equation if we're talking about desalinization. That's going to be the big political hurdle here. And I don't think that Mexico would see any of that development. They just have too strong of an opposition there to nuclear power. So, a lot of things going on, but I have noticed my holdings in the LIT fund, LIT, which is the lithium ion battery supply chain fund. They invest in everything from battery makers to miners to chemical producers, anyone that's involved in the supply chain for lithium batteries. And interestingly, the lithium supply, the methods, techniques, and all these things that you're using for lithium are not directly transferable to other types of potential battery chemistries, but they are close. Meaning a lot of the research hurdles that were done on lithium-ion batteries are going to be applicable to potassium-ion and sodium-ion batteries. So, in terms of energy storage in general, I think that the future looks very, very bright. And I think it looks far brighter for grid scale level battery storage. And I think that Europe is going to be one of the bigger markets for grid scale level battery storage. And because they have a little bit less security in the way of in the way of energy supplies at this point, and because they have challenges when it comes to certain types of renewables. So I do think that is one of the ways that things will go. And honestly, if you own Tesla, then you own a very good play on the battery industry, and you own a very good play on the storage energy storage. So here is some kind of bad news here when it comes to BYD. Usually when I talk about BYD, everything is glorious here. But let me see here. Let's go back to the front page here. The BYD Tang was recently kind of put through the ringer in a test. Let's see where it is right here. Let me go through and take a look at this. The BYD Tang headlights considered the worst in the industry. That's not what I'm talking about. Okay, so they're in the worst in the industry. There was another article on here that I don't see right now. Where it was talking about the performance of the BYD battery, and it was not good. Here we go. The BYD Tang does not shine in Bjorn's 1,000 kilometer challenge. It took 11 and a half hours to complete the test. The BYD Tang is the latest electric car tested in Bjorn Nyland's 1,000 kilometer challenge, designed to check long distance travel capabilities related to the combination of range, efficiency, and fast charging. After the range test and initial charging results, we knew that it would not be the king of the highways, but the result might be acceptable for a large 7-seat SUV available at a reasonable price. According to the video, the BYD Tang, equipped with an 86 kilowatt battery, completed the distance of 1,000 kilometers or 621 miles at an average temperature of 18 degrees Celsius in 11 hours and 25 minutes after some time deductions. That's a comparable time to the previously tested Neo ES8, but far behind European SUVs like the BMW iX, which was at 1010, or the Audi e-tron 55. Well, it's not as bad as I thought. So I'm sure the giant price difference between those models, between the Audi and the BMW and the BYD Tang, is probably going to make you ignore that extra hour that it took to drive 621 miles or 1,000 kilometers. So the main issue for the BYD is high energy consumption. According to the video, the average consumption amounted to 327 watt hours per kilometer or 526 watt hours per mile. Because of that, the range is effective and the car has to stop for charging more often. Here comes the second issue. Bjorn Nyland discovered that the first few minutes of the fast charging session run at very low power level, which in the case of 6 charging stops is worth 25 minutes. This time is wasted because the amount of energy replenished at such low levels is marginal, but we understand the car's battery requires it before accepting higher power. So it says after the initial slow phase, the charging curve is not bad at all. And it's stable at 115 to 119 kilowatts between 0 and 64% speed of charge. So not the best results, but not as bad as I originally thought. BYD, though, in terms of the vehicles they are selling, they are absolutely kicking butt at this point. And this is a company that you should keep an eye on. My concern, of course, is issues with China itself. They, other than their buses being sold in the U.S. right now, they're not selling any of their passenger vehicles in the U.S., but they are exporting them to a couple countries in Asia. They are exporting them to Australia. They are exporting them to Norway at this point. I don't know how much of that is test and how much they've really sort of committed themselves to those markets. And when I look at all of the Chinese EV companies at this point, I don't know how much they've really committed themselves to the markets that they're in, right? I really don't. So that's kind of the big concern that I have right now. How much of this is just a test to see, and whether or not they're really going to go full bore into those markets. And right now, they don't actually have the production capacity to go full bore in those markets. But we've talked about this before on my channel, that just because of the way the Chinese auto industry works, you aren't going to get a single company there take a seriously dominant slice of the pie. Even a few years ago, when I did this research at the very beginning of like EVs really taking off in China, there were 130 different auto brands in China. So, do you think the Polestar is as risky as Xpeng or Neo in terms of? No, I don't. So Polestar is basically doing everything correctly. So Geely is a legitimate owner of the brand there, but no, they're doing everything more correctly. It's not registered as a Chinese company. A Chinese company just happens to be the majority owner of it, and they're fully compliant, as far as I know, with GAP standards. So very, very different. Polestar, I think, would be I think maybe actually registered as a Swedish company. I can't really remember. But no, it's definitely very different in terms of its delisting risk. So they are under the radar here, actually selling quite a few vehicles. I think that they had about 40,000 pre-orders for their vehicle that's first being marketed here in the US, which is very positive. And they haven't made a lot of waves. So one of the things I did want to report that is anecdotal is that I have been doing a lot more driving in the last 2 weeks or in the last week and a half rather, just for various reasons, running my daughter back and forth to school and running all over town for business reasons. But I have been actively paying attention to how many electric vehicles are on the road here in San Diego. And the numbers are astounding, guys. Absolutely astounding. It's not just that you can see it, basically at every second that I'm driving, I can see a Tesla, right? Every single second, and usually more than one. So anytime I'm on the highway, anytime I'm on a road, I can see a Tesla. But not only that, I started noticing all of the Ford E-Mox that are out there, all of this little tiny Fiat that's around. I even seen a couple of the electromechanica cars around, the little 3-wheeled monstrosities. And there are a number of vehicles, like I've seen a couple Porsche Taycans around as well. And I've seen a number of vehicles that I didn't even recognize, but on the back, they stated that they were EVs. So when the numbers come out at the end of the year, last year, I think it was 12.7 or 12.4% of all vehicles sold in California were electric. That number is going to be higher. I would estimate it's going to be higher by the time the year ends. And we've seen a 25% increase in demand for EVs since we saw gas prices spike. And I think that even if gas prices come down, you're still looking at energy prices here in the U.S. being much more favorable compared to Europe. I think that the demand may really take off here. So So Adam Neumann of WeWork fame has a new startup, WeFlow, communal multifamily apartments. Will you be investing? No, no. Communal multifamily apartments. I'm not even sure what communal multifamily apartments would mean. Um, yeah, I think I know what it means, but I could be wrong on that. So I'm going to look into that just because I'm not a fan of Adam Neumann, of course, but I actually like WeWork facilities. They are super cool. It's like you can be, I've actually worked in them a number of times, and you can actually feel like, even though we were working in the really boring financial industry, you can feel like you have this startup energy when you work in a WeWork and you're surrounded by people with great ideas. They have, the coffee bar there where you can get coffee and talk to people, and you can they have beer nights and happy hours and that sort of thing, and it's a great space for sharing ideas. That if you don't have the money for like a full-time office, you can use a WeWork 1 or 2 times a week and still have exposure to that office environment where you get to bounce your ideas off of people, which I think is really important. Like Malcolm Gladwell, author of a number of very famous books, including Tipping Point and a couple of other ones that are really famous. He got a lot of heat for saying that work at home is not in your best interest. So I'm one of those people that thrives in a work and home environment, right? But I do recognize that work at home can be very detrimental to your career. There's a huge social, and this is the part that I'm terrible at, is the social component of any career, because I just don't have a lot of patience for people. But that is the biggest stumbling block for a lot of people, is mastering the social component of the work that you do, right? And there's a huge social component to that. It's getting to know the right people, getting recommendations to the right people, being considered for the right jobs and promotions. And he is absolutely correct that you may feel really, really comfortable working from home. You may get more work done. You probably won't get the recognition for it because you're not in that social environment. And so I don't think Malcolm Gladwell caught a lot of really unjustified heat saying, "Oh, you work from home and you make these comments. It's enormously hypocritical." He recognizes that he works from home on his couch with a laptop and he can't sit at a desk and work. But he also recognizes that for many jobs that are out there, that working from home long term, or at least full time, is actually detrimental to your career. You need social contact with the people that you work with, really just to stay kind of at the forefront of their minds in a lot of cases. So he may be one of these serial startup guys. You don't know. There's a lot of famous people out there that have started companies serially, and none of them have been wildly successful. WeWork, on the other hand, though, I really like their product, but they really are just a subleaser in a lot of ways. So subleasing communal multifamily apartments. So yeah, WeWork for apartments. I think we already have WeWork for apartments. It's called Airbnb. So Airbnb has gone from being a reasonable way to spend a vacation to being outrageously expensive in almost every location that I've looked at recently. So I'm planning my next vacation that I'm going to go on. I think next year I'm going to be going to Japan and Korea, and then the year after that I'm probably going to do an archaeology trip to Guatemala or something like that. But I know it's 2 years out, but I'm looking at Airbnb rates in Guatemala, and for reasonable accommodations with a Wi-Fi connection, it ain't cheap, folks. It just ain't cheap. So yeah. Anyway, let me know what you think in the comments below about things going on in the stock market today or in EVs. Not a ton left that I wanted to cover. Let me see. Was there something that I missed? Nope. So let me know what you have. Otherwise, I'm going to call this a day and I'll be back tomorrow. Oh yeah, this was the big news that I wanted to cover. Here we go. Tesla's full self-driving feature may have finally met its match, and they're talking about the California DMV here. Tesla's foil isn't a silver-haired U.S. senator. It is the California DMV. The automotive regulation has traditionally fallen to the National Highway and Traffic Safety Administration, part of the Department of Transportation of Congress, which can push them to do things, to regulate things specifically like driver technology, but it looks like they're not going to be able to. The California DMV has become the first U.S. government entity to formally move against the naming of full self-driving. So the NHTSA has emptied some robotaxis from its safety standards and described many potential benefits of these technologies, include improving quality of life, safer roads, shorter commutes. And I think all of that can come in the future, as well as a lower energy usage and more access to jobs. But I think that, and I like the idea of self-driving. I just think we're further away from it in terms of the technology than we think it is. So they don't have any standards put together right now. But the regulatory impact is being felt right now from the California Department of Motor Vehicles. And look at what's happened. It was 2017, Uber provoked the DMV when it tested its autonomous vehicles in San Francisco without a required permit. The DMV revoked the Uber vehicles registrations in response, and Uber pulled its cards from San Francisco and went to Arizona, where they had looser regulations, but it was kicked out of the state in 2018 after one of its test vehicles was involved in a high-profile fatal crash, and then it sold its robo-taxi business in 2020. And of course, we're all looking to see what Waymo and things do like that. Hold on a second, question here. Absolutely. Banks have gotten sort of massively unfairly beaten up, especially investment banks larger banks that are involved in investment banking have really gotten unfairly beaten up with the this last round through June. So some of that opportunity has, of course, eroded since I made my first video on like 4 great recovery stocks. Those stocks are all up significantly by this point, and all stocks are. But those stocks are really going to be driven by the numbers. And it's going to take 2 or 3 quarters for those numbers to catch up as the spreads start to impact balance sheets. But they are going to. You're going to see revenue growth in those. Even though you may see slowing demand, you're still going to see revenue growth because you're going to be making more money on deposits, right? Yeah, this is something I talked about briefly on a live stream. I'm not in favor of this partnership. I don't think it's actually a very good match. I don't think that their businesses align that well. And it would not surprise me at all if Unity's board rejects the offer, or if they put the offer to shareholders and it's rejected by shareholders. I wouldn't see that all, but for a couple of reasons. It's a cashless deal, right? Folks are going to get shares in AppLovin. Unity's basically going to disappear. Also the offer is far lower than I think the company is worth. I think that if you're really trying to price buying this company out on like a 5-year basis, it really would need to be done somewhere in the $90 range. So I think it's priced way under market price. So the Polestar 3 will be manufactured in South Carolina. I wonder if it will be cheap enough to qualify for subsidies. So South Carolina is an interesting choice. It's and especially where they're going in South Carolina. South Carolina is not cheap, right? And when I'm looking at the market where where my father lives, not my biological father, the man who raised me, it ain't cheap there. In fact, housing prices are roughly the same as they are here in Southern California, and it doesn't get cheap until you get way out into the boonies. You have a number of manufacturers that are located there. Most notably is Boeing. I think they make like the C-130 there, or something like that. They make one of those large planes out there, and it's where you have access to a pretty decently educated workforce. Housing prices in the past were very cheap, and labor expenses were lower. That hasn't been the case for a few years now. Like especially the Charleston area has really exploded. Anywhere along the coast has really exploded in terms of cost. And I've talked about this before, but Huntsville, Alabama, as a manufacturing hub, seems to be like a really good opportunity right now. I'm seeing a lot of opportunity in real estate there, particularly because I think we're about to go through a wave of, a generation of investment in defense technologies. We've just gathered so much data about our capabilities, the capabilities of our adversaries, and the vulnerabilities of our adversaries, and our own vulnerabilities, that I think it's going to spur a wave of research, development, and of course, manufacturing and production of defense technologies here in the future. And Huntsville, Alabama is going to be one of the biggest direct beneficiaries of that. And I wouldn't be surprised if we see a lot of auto companies move manufacturing into like Tennessee and Alabama and places like that. Manufacturing is labor expenses are dirt cheap. you're looking at people starting at $12 an hour and topping out at $24, $25 an hour for manufacturing jobs at the entry level, right? So yeah, and that is far different than other parts of the country. And the economics work out a lot better there too. But what I really mean is that that's a population that's there to be exploited. Those would be quality jobs. They would be able to pay them a lot less money, but the workforce is still educated enough to operate the equipment. And that was the case for South Carolina. I think that the miscalculation there was how fast expenses were going to rise in that area. Like Charleston in particular is not cheap, and even places as far away as like 45 minutes away in like Edisto, not cheap at all. Any thoughts on Louis Vuitton, Tennessee? Are their products recession-proof due to their client base? So I tend not to invest in these luxury goods, and that's probably been one of the big. So I don't invest in luxury goods that don't have an industrial process behind them that's going to lead further down the value chain to a broader market. That's what I'm really saying. So, and Louis Vuitton has always been one of those that I would have excluded from myself from investing because of that, because I see limited growth potential. As far as being recession proof because of their client base, I don't think they're recession proof, but they're actually going to be very recession resilient because of their client base. I think that assessment is probably fairly accurate, but like recession resistant, not recession proof. But I also see their growth potential as being fairly limited after we see a full recovery. Meaning, even if we go through a recession, they lose 20% of their value. They're going to snap back that 20% pretty quickly. But I'm seeing like 10% growth in the future after that, and that would be solidly based on basically on current production. So yeah. All right, guys, it's been over an hour. Thank you for attending today. I will be back tomorrow. At least I think I'm going to be back tomorrow, and looking to put out another couple of videos this week. I did a couple of weird videos last week. I understand not many people are interested on my thoughts on carbon sequestration using mycelial networks. I realized that one was pretty out there for you. I didn't expect more than a few views on that one, but I am serious about that. I think that the solution to carbon sequestration is not going to be some device that pulls carbon dioxide out of the air. It's going to be inoculation of soils and basically repair of mycelial networks with mycorrhiza all across the planet. So yeah. Anyway, thank you very much for coming today, and I will see you folks tomorrow. Comment for the algorithm and hit like, please. Thank you for reminding me. I never tell people to comment for the algorithm. Hit the like button. And if you have not subscribed to my channel, please subscribe. I usually lose a few subscribers every time I do a live stream. You might be asking why I do it if I lose subscribers. It's really just for my longtime subscribers. This is who I'm doing this for. But I'm always open to questions. I like it when you guys ask as many questions as possible. I don't always have something to talk about in terms of like great news or interesting news. Today was one of those days I didn't have a ton to talk about. So thank you for the comments, and I will see you next time.